What is up, everybody? Welcome back to the channel. My name is Kyle Williams, and in today's video, I want to dive deep into what are the things and the processes that make people millionaires. Not just people, but specifically traders. Like, how do you become the millionaire trader that you've always wanted to be? How do you, why are you even here watching this video? Why are we still here? Probably because you want to make some money. How do not only myself and almost all millionaire traders that I know, what do they do? What do they look at? What's the process that they go through? And I find very common similarities and just traits that they follow. So if you want any chance to become a millionaire yourself, specifically in trading, this video may be of use to you. And before we get in, let's talk about quickly some things that I think you probably don't want to do. You don't want to watch CNBC or whatever favorite news outlet you have and try to follow what they're saying. Because I think, in my opinion, they're just playing guessing games. And again, they could be of value. Their guessing games could be of value, but it's certainly not what I do. It's certainly not what most millionaire traders that I know do. They're not here to invest in the S&P 500 and make their 10, 15% a year. Granted, that's great when you're 65 and retired and you have a nice little retirement nest egg. That's great. But again, if you're watching this video, it's probably because you want to make millions in a shorter time frame than 40 years, maybe more like 4 years. Now, I'm not going to say 4 months because this is not a get rich quick thing. This is not 4 days. This is not 4 months. This is a 4-year, 5-year, 10-year kind of thing. And again, over that time period, we're not talking 1 million. We might be talking multiple millions. I myself have been trading for 7+ years and I'm over $4 million in trading profits, right? So it is possible. It doesn't take 40 years, but again, it certainly doesn't take 4 months, or it takes longer than 4 months. So without further ado, let's dive into actually what do you do? How do you want to actually go about making millions trading in the stock market? So let's jump right in. The first thing I would say, if you've probably heard it before, I know it's not the funnest thing to hear, but you should be tracking. And the reason why I say you should be tracking on terms of how you trade, what you trade, did you win, did you lose, how did you feel about it, journaling. The reason why I say that is because if you want to trade and want to make millions, you probably have to treat it like a business. And I say probably kind of jokingly, you do have to trade it like a business. Any significant millionaire that's made money, that hasn't made it in over 40 years of retirement, but has made it actually significantly in a relatively decent period of time, probably runs a business, probably has some kind of investments. But again, they have investments because they have money, and they probably got that money from a business they ran. And so treating trading like a business is super important. And again, like any business, they have a balance sheet, they have an income statement, and that's what tracking is for traders. Knowing what your income looks like, what kind of trades are you taking? Are those trades bringing in profitable numbers, profitable trades, money into your account? Literally. And again, that can look in all shapes and forms. And a lot of excuse I fear people say is like, oh, I don't know what to track. I don't know how to track. But yeah, guess what? You also don't know how to trade. That's probably why you're watching this video. Okay. But here you are diving in, trying to learn. So if you haven't tracked before and you're nervous or you don't know what to do, guess what? Put your feet in the water, just start, and you'll figure it on the way there. Certainly I had no idea what I was tracking when I first started, but look at me now. If you've been watching some of my YouTube videos or you're in Clover Trading, you know exactly how I like to track. I am very detailed, very in-depth, and it wasn't an overnight thing. It was a multi-year process, and now I've kind of perfected it for myself. So that is the first thing. You can't know your numbers unless you track them. Just period, plain and simple, okay? The next thing is looking at different time frames. Now, if we actually get into the charts here, one thing that is very important, and I think a lot of people see a misconception, especially among new beginners, is they want to look at one time frame, or they think one time frame fits all. The 15-minute chart's the best, the 1-minute chart's the best. I don't even look at the intraday, I look at the daily. They try to pick some time frame that is the perfect time frame so they don't have to go back and forth. I would disagree. I think you need to look at all time frames, specifically starting out on the daily chart and then moving your way in. So if we look at a chart here like FEMY, this is a very hot runner. It's up 1,000% in the last 4 days from 30 cents all the way up to $3. That's great. And again, I wouldn't know this had I not looked at the daily chart. So I like to look at the daily chart first. Not only that, I like to go far back as I possibly can. So we keep going back and back and back. So this is a relatively new stock. It's only been trading since 2021. So a couple years old. But this tells a story. I understand that this stock has not really had any significant run since it's been trading as a stock. It's gone nothing but straight down. And now here we are having a really solid run with a lot of volume. Again, any previous day in his history, not a lot of volume. The last couple days or last couple months this year, volume has actually started coming in. Again, that is information that is useful to me. On top of that, let's then go into just smaller. Let's go to like an hourly. You get a better picture. You get to see, instead of, Dom likes to call it the intra-daily, right? You see multiple days, but it's the intraday of each one of those days. You can see it started with a run, it consolidated, it kind of restarted that run after a day or so, and now we're on this much bigger run, pushing us up that 1,000% mark. You go even lower to 30 minutes, you can see a little more details. That was actually more consolidation, more details, more intricacy. 15 minutes, 5 minutes, 2 minutes, and then down to the 1 minute, right? And again, notice how I press the 1 minute, it takes me to something so small. Like I get no information out of this, but if I just scroll back, even on the 1 minute, I get a much bigger picture of what we're looking at. And eventually I get the full day. Okay, that tells me a lot of information, and beyond just the actual price action, you want to understand the context, the storyline, right? What's the news? Why is it moving? Who's in it? Is your best friend telling you to buy it? Is your best friend who's a great trader telling you to buy it, long it, or not even tell you? Is he longing it? Is he shorting it? What is his opinion, right? The more you can understand about a stock beyond just looking at time frames, but the context, the story, I think it's very valuable and it's really useful. And again, let's make the analogy with the business. You need to know what marketplace you're in. What product are you selling? Right? Who are your competitors? And we don't have any product as a day trader. The product is the stocks we're trading. But again, it's parallel in the sense that the more information you know like that, the better chance you have of making an educated decision. Okay, next up is understanding risk reward and when to bet big. And I say that because, like risk reward, the very essence of it is making sure your gains are bigger than your losses. Very simple. If you have losses that are bigger than your gains, you make the chances of profitability as a trader and making hundreds of thousands, if not millions of dollars, very difficult. Again, back to the business analogy. If your losses or your expenses are bigger than your revenue, you're gonna go out of business. Like, yeah, hypothetically, you can take on some debt. Yeah, you can bring in some investors. But ultimately, over the long run, your goal here is to make a profit. And to make a profit is to have bigger revenues than your losses or expenses. And in this case, it's just trading gains and losses. Yeah, there's some expenses, there's some fees, but the most part is it comes down to, are your trading gains, your trading wins bigger than your trading losses? That is a huge concept and it's very difficult for people to understand, but it's like literally the bread and butter. On top of that, and again, we'll go into some examples of why that works, or one specific example, but beyond that, once you understand that, the next level to then actually making millions is understanding where are the actual trades or the actual scenarios of trades bigger and better in your favor to then bet bigger and make that risk reward that much worth it. And what I mean by that, if we look at some of my biggest trades in my career, some of my most profitable trades, it wasn't me risking a very small amount of money. It came to the point where I was like, you know what, this trade is so good, the indicators are all aligned, which again are things that we teach in Clover Trading. When are the indicators all in your favor to try to bet bigger or be more aggressive? When that happens, you kind of have to put your foot on the pedal a little bit. You have to push it. And again, this is not a beginner thing. This is maybe a more immediate to advanced thing, but nonetheless, it's how very skilled traders that I know got to their millions, at least a significant portion, right? And so that's kind of, again, that's why I'm telling you this, even if you're not an intermediate or advanced trader, if you're just a beginner, just understand that that's the goal, that's where you want to get to. BW and DW here was my first 100K trade, right? I literally shorted it on this next day, on this first red day, and then covered the next day, pretty much taking it from the mid 30s, like 33, 34, all the way down to like 21, 22. And now granted, I made like 104 grand. Do you think I was risking $1,000? No, I was risking like $10,000. I was risking way more. But again, risk to reward. Would you risk $10,000 to make 100 grand? 10 to 1. Absolutely. But again, the only reason why I was comfortable risking that much money is because I had all the indicators aligned. I knew what was statistically likely to happen to this stock. And again, that's much beyond the scope of this video, but it's things we teach as traders in Clover Trading. It's what most profitable traders like to know and understand about their setups, about their trades. And again, it's what led to me to making my first six-figure win. So that's super important. That's good to know. Next is obviously having a trade plan. Again, this kind of is going to tie in with that risk reward. So if we go into something like NKLA, let's actually go over a trade I took and what kind of trade plan I had. So NKLA, let's actually tie in all of it together. Let's start with the time frames. Okay, let's look at the daily chart. It's had a really sick run. If we scroll in a little more here, right? Really sick run the past few months, and it's kind of died off and it's kind of coming back, right? We're bringing some momentum in, volume's starting to come back. But again, if we look at even the bigger daily chart like we just did, it's very crushed, right? Very, very crushed. For those who know the story behind this company, they were electric vehicle. They still kind of are. They had a lot of promise, and that promise turned into a lot of crap.
I think I can smell shite.
No nice way to say it. But again, they're still alive. They're still trying to make it go, and maybe they could. But the point is, this is where they are now. And on top of that, after this run, the CEO put out a video addressing to shareholders kind of where the business is, where they want to take it, etc. I didn't watch the actual specifics of the video, but normally when a CEO makes a video like that, it is a bullish thing, right? He's not going to come on and say our company's crap, don't invest in us. He's going to say the actual opposite, right? Of course, because he wants his business to succeed. It's very self-explanatory, but nonetheless, a very bullish price action came out of that. That was on this green day right here, a lot of volumes coming in. And if you notice, on a lot of days in the past where a lot of volume comes in, it usually leads to a gap up, right? That is one of the little slight indicators that we look for. And so here's a big volume day. It closed around what? 120 or 140, and ended up gapping up all the way to 170. Okay, huge gap up. Another day here, big, huge volume, closed at what, 222, opened up at 273. Another big gap up. So here we are, another huge volume day, well over 200 million shares traded, very similar to how big these days were. And so when I first saw this ticker or this stock trading this much volume, I said, this has a history. Again, looking at the daily chart, looking at the time frames, this has a history of gapping up the next day. Again, that's just one indicator, but it was enough of an indication for me that I want to go long this overnight. And so if we actually go into the intraday here, this is the intraday of that day on NKLA. Now, granted, it is a slower mover. And what I mean by that is that it has a much bigger float, amount of shares that are able to trade it in the stock. And so that's why you see this price action. It'll actually have a lot of time frame or a lot of minutes go by where it's just trading in a 1 cent range because it takes a lot of volume, a lot of buyers and a lot of sellers to actually move this stock. That's just one of the characteristics. Again, wouldn't have known that had I not looked at the intraday level. Forget the daily chart. We already gone over that. But now when we move into the intraday, we get more information. Okay. But now I saw this right into the close. Right, I looked at the volume, I looked at the news, the video, etc., and I decided to buy 30,000 shares right at 115, right into the close. Right, this is the last minute of the day, right into the close here, risking. Again, what is my trade plan? If I'm entering a 115, I want to risk some key level. The best key level for me was right around where VWAP is, right where this yellow line is, and where the midday pullback kind of bottom, which is literally this 103, 104 level. Okay, so I'm roughly risking 10, 11 cents from 115, call it to 113. Ideally, or in the worst case scenario, 12 cents. Okay, stop loss right there, 103, entry 115. Okay, that's a 12-cent entry to stop loss area. So risk reward wise, I would like something better than 1-to-1. I know 1-to-1's not great. Preferably you want something 2-to-1, 3-to-1, 4-to-1. But again, in a perfect world, I can't choose my risk reward. I have to just pick my spots in the stock and hopefully the odds are in my favor or a stock is gonna move in my favor to a risk reward that actually is better than 1-to-1. And so the next day I knew the odds of it gapping up were big. So I wanna take this overnight and catch some kind of gap up. Well, let's see exactly what happens the next day. If you keep going here, we keep sliding over. The next day, it ends up moving up, right? After hour starts creeping up, by pre-market, it's already at the 130s. We keep going, and this is now the open the next day. All the volume comes in, it spikes to 138. I actually end up selling it all at 135, and then it kind of crapped itself, okay? Now granted, so I bought it at 115, I sold at 135, that's 20 cents. I was risking 12, 13 cents, I made 20 cents. It's a little bit under 2-to-1 risk reward, okay? So nothing great, but guess what? I bought 30,000 shares, I was risking, call it 3,300 bucks or so, 3,500 at worst case, 36, and I made 6 grand. Back to the business scenario, that's $6,000 of revenue, of profit. Now granted, was I willing to risk 3 grand or so on it? Yes, but nonetheless, I was risking 3 to make 6. It's a positive risk reward scenario on top of the fact of the indicators that are in my favor, hence why I took the trade and it worked. Again, this is just one example. I've taken thousands of trades in my career. Most millionaire traders have taken thousands, if not tens of thousands of trades of their career. This is just one example for the simplicity of this video, but you understand the point. That is the process. It is just over, rinse and repeat, and again, and again, and again. You add up multiple $6,000 profits, and all of a sudden, you're a millionaire, right? Again, very easier said than done. It's not that simple, but you get the point, right? This is a simple stepping stone in that direction. Another thing, another process or step that most traders, successful traders, are willing to take and go about is accepting losses, right? And I know we've been talking about losses, I've been talking about how much I'm willing to risk on any given trade, but to back that up is being willing to actually take that loss when it happens. Okay, if you haven't seen the video that I made a couple weeks or months ago, I talked about some of my bigger losses. It's like how I lost, $1.4 million for my biggest trading mistakes. It'll be a link up here or a link down in the bio. Go watch that video because I really talk about some of my biggest mistakes and what it's led to some of my biggest losses. And over the course of me making $4+ million in trading, I've had to lose just as much money. I've made 4, but I lost about 3. So in total, I've actually, again, business analogy, let's go back to it. I've made $7 million in revenue, but I've lost 3 million. Hence I'm up 4 million. Okay. It's like, do you think I would be here where I am if I wasn't willing to accept those losses of $3 million along the way? I have to be. It's inevitable, right? Granted, that video talks about how if I just avoided some big losses, I would have actually saved some of that money. Yes, but nonetheless, I still would be losing hundred thousands, if not over $1 million to get to where I am today. If you think you're gonna be a millionaire trader, never losing more than $1,000 in a trade, if you do, call me and let me know what your strategy is because I would love to know, right? The point is millionaire traders, successful traders are risk seeking. Granted, do they manage their risk well? Do they accept their losses when they happen? Absolutely. But the point is they're not hiding from losses. They're willing to accept them when they happen and move forward and learn from them. Okay, it's a huge, huge importance. Okay, I know a lot of people want to come to the market and not have to really risk any money. That is a big mistake. The sooner you accept it and the sooner you get comfortable and familiar with it, the better chance you're gonna have at actually making money. It's a very counterintuitive thing, right? The better you get at accepting losses, the more money's probably naturally gonna flow your way. Okay, so there's that. And last but not least, the one thing that I personally see about how traders make their millions is that they stick to what they know, they stick to their niche. And what I mean by that is they're not trying to trade 10 billion different things. They're not trying to trade every little thing in the market. They have found specifically what they like, what they're good at, and they stick to it. Again, back to the business analogy, Uber, which again, they're probably not a good example. Uber doesn't make much money, but Uber isn't in the iPhone business, isn't in Apple's business, right? Tesla is not trying to, I don't know, sell you sunglasses. Maybe they do, I don't know. Tesla has some merchandise here and there. But again, TNT or AT&T isn't trying to go to space. Right? It's simple stuff like that where it's like you have a business model, you know it works. Yes, you can branch out here and there, maybe try new things. The point is that that's your direction. And again, for me, I love small priced momentum tickers. As we looked at NKLA, as we looked in WNDW, I know it was 40 bucks at the time, but guess what? Normally, for a very long time, it's traded in the, call it $1 to $5 range. It's normally been down here. Okay, it just was so awesome when it went into 40s that one time. But again, talking about like AMC, right? AMC was another big winner for me way back here in 2021. Again, back up in the $50 range. But again, where is it now? It's back down at $8. Right in that momentum range is where I like to go. And again, it came from that range, hence why I was watching it when it ran huge. I'm sure if you've been watching the stock market for that many years, you were here around when this happened. It's a very fun time to be in the markets. But nonetheless, that's the kind of stock I like. I don't branch off and try to trade the S&P 500, right? Maybe I will one day. Maybe I'll want to adapt and kind of improve my trading that way. But when you get started and want to kind of make your first 10K, 100K, a million, it's gonna be in some kind of niche, some kind of tunnel vision area. You do not have to do everything. There is hundreds of millions, if not billions of dollars in the stock market every single day, and you're here just to try to make your first million. Guess what? You can do way less than you think you do. So yes, that's all the things that I've personally noticed, and not only myself, but a lot of very successful multi-millionaire traders. Again, if you're watching this, you have some ambition or some determination to do that yourself. I hope you do. Good luck on your journey. If you want more videos like this, make sure you like and subscribe. We're having more every week. And if you want to even dive in further, Clover Trading has a 7-day, $7 trial to kind of test out the water, see what you like, see if our style is your style. And on top of that, we just love giving back to the community. We have boot camps, all the good stuff. So stay tuned for next time, and we'll see you then.